Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the chart. In this video, I will be speaking about NZDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders. So the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a very strong monthly demand and support area. Now, from here, all this previous rejection to the upside was created. Again, here, the market tested its zone and rejected it to the upside. And at the moment, we can see how the market is testing the exact same zone, rejecting it to the upside, and from here we could expect more bullish continuation to be created away from this area. So from a monthly standpoint, everything seems quite bullish. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, what we can see is that we went from having a market that was creating lower lows and lower highs to now having a market which is creating higher highs and higher lows. In a situation like this, we could expect more bullish continuation to be created away from this area. So the weekly time frame as well looks quite bullish. Now, if we drop down on the daily time frame, what do we see? Well, from a daily standpoint, first of all, what we must notice is that the market has just created a very strong impulse to the upside. Now, generally speaking, after the creation of an impulse, what we could expect is first to see a correction and then to see the continuation to the upside. So from a daily standpoint, since we already have the impulse, and we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 50% and 0.618 and 0.786 Fibonacci retracements all lining up exactly in this area of price. Now, if we look left, what we can easily notice is that this area of price is also exactly the previous daily resistance turned support. So in this case, we actually have confluence of support inside of this area because we have both Fibonacci levels and the previous daily resistance turned support from a structure perspective, both lining up exactly in the same area of price. So what we could expect here is a retest of this previous daily resistance turned support and then to see a rejection to the upside away from this level. So how I could be approaching this potential rejection to the upside away from this level? Now, first of all, let's go and see what we have when it comes to the commitment of traders. So the COT data, so essentially what hedge funds and the big players in the market are doing. Now, what we can notice is that we have already institutions adding longs and closing shorts. In fact, we can notice how with the last reports, we went from having minus 19.6k net positions all the way up to having minus 3.3k net positions. So clearly, institutions are now moving to the bullish side for the NZD, meaning actually to the bullish side for NZDUSD. We can see in fact how with the last report we had 1.2k longs added with the last report and 8.8k shorts getting closed. So clearly institutions are adding longs, closing shorts and moving to the bullish side for NZDUSD, therefore making it stronger. So NZDUSD is currently getting stronger and longed by institutions. Now, this increases the probabilities that inside of this confluence of support, we could see more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this area. Now, what we could expect in a situation like this. Now, keep in mind that, as usual, the best time frames when it comes to the directional aspect of the market are the monthly, weekly, and daily time frames combined with the COT data. When it comes to confirmations, it's always best to look at the lower time frames. So if the market from an intraday perspective, so on the intraday time frames, would shift from an intraday bearish market to an intraday bullish market, at that point, we would have good probabilities of seeing a potential rejection to the upside away from the area, potentially completing this daily impulse correction and impulse pattern to the upside. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and in my bio. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program. And you will see me here that in this video, I break down exactly everything that you gain access to in this amazing mentorship program. And if you continue to scroll down the website, past the testimonials, you will see that you will have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out at least as soon as possible. The link is both in description and in my bio at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.